Good morning, everybody. Good morning, good morning, good morning. Good morning, good morning, good morning, good morning. Hope all is well on your side. Welcome to the opening bell. Houdini, I see you there. Let me know if all is well. All right, let's get going. Before we do that, remember the information we discuss in this video is opinion and should not be construed as advice in any way. Short week here in SA, guys. We had a public holiday yesterday, Freedom Day, and obviously we have one, on Friday as well, the 1st of May. But it's good to be with you nonetheless. We are looking at the markets, looking at what's upcoming. And at this point in time, it seems like we have the FOMC meeting minutes tomorrow, which we chatted about last week. And we said we would like to know whether the US will be keeping those rates steady. Will it be unchanged? Will they be cutting? What's the actual process now? Because we've been looking at the US and Iran, conflict over the past almost 2 months now. And what's important to engage with regarding that is looking at the fluctuation of the oil price. And that's what we've been seeing. It's really been pushing quite a bit between different ranges, pushing up to $100 a barrel, coming down as little as $88 a barrel, and then pushing up seamlessly again. We're now sitting at 103. But even although that's the case and it's reached a new high within the structure here, we're seeing exhaustion also kick in simultaneously. So that means that there could be a bit of a dollar weakness coming through if this oil price does come to the downside, which is absolutely possible. If you look at that from a 4-hour perspective, it is only but created a new high within the structure. So there has to be some form of higher low. Whether the higher low comes till there or pushes up first and then comes down, all right? So it could from there come down, or from there go up and then produce a higher low. So those are the two things that we're looking at. Now, for you to have some more clarity there, make sure that you dial into the FOMC meeting minutes tomorrow. Because if we do get a stronger cut, not a strong cut, if we do get a cut in the interest rate, that's generally considered as a weaker currency there, all right, which is good because now there can be some flows happening within the economy. The citizens, consumers can start taking out loans because there's obviously a lower interest rate attached. They can, obviously buy some cars, and businesses can expand. They can invest in infrastructure development and so forth. So, if that happens, then we're going to see some of even the stock markets actually a push up, because obviously we're going to get a stronger push in companies trying to expand here. So if you look at the stock market on a daily frame, looking at the monthly movement here, all right, you can see for the entire month, even although we've had an oil price that has fluctuated, you can see the stock market has been doing exceptionally well for the month, irrespective, all right? So we are possibly looking at a possible correction in the stock market, which means then on the other side, we could be getting a stronger dollar, all right? That's if they keep the rates unchanged or the inflation goes up and we get a raised rate, then we could see some of the stock markets come down. This is all short term, all right, guys? This is not us looking at anything long term at all. This is all short term for now, all right? If you look at it from a more annual perspective, the stock market is still bullish, absolutely. The S&P 500 is still up there. The US 30 is still up there. We are still bullish on the stock market, all right? The only thing that's happening now intraday is that we're seeing the fluctuations, and that's where you see the structures. So there's definitely, exhaustion that's kicked in. If you do look at the earnings season as well, you'll see that the S&P 500, the NASDAQ is a little bit down. Obviously, investors, are watching the company earnings. The companies right now that's reporting is UPS, General Motors, Coca-Cola, Visa, and Starbucks. But the focus is on the ongoing Iranian situation. So you as well as a trader, make sure that you dial into that and you keep your eyes peeled for what's happening in the headlines, because that is what's causing the major drive right now. And secondly, the interest rates. Now, the Euro USD is something we're looking at as well. Let's say the oil price comes down. If the oil price comes down, we're looking at price push up from the 116 to about 118. And if it continues, we're looking at going a little bit higher there, all right? Roughly to the 1.20 mark there. But for now, we're looking at the 1.18. That's if the oil price comes down. Now, if the oil price goes up and it continues to go up, by the book, we're looking at a stronger dollar here, as what's been happening for almost 2 months. We're looking at price coming down. So we actually, really in a centered position right now. We are actually consolidating in this area, and what it looks like, it seems like the dollar could be strengthening perhaps towards the London and the New York session today. And if it does that, we're pushing down a little bit further here to possibly create some more structure at the downside. That's on the Euro USD. Now, I'll be in on the live trading room this afternoon, and you can obviously tune in there, all right, and just check out some of the technicals that we'll be checking out. The same with the USD JPY. We're looking at the Japan economy. They kept those interest rates the same. The inflation is expected to still rise, but the economic growth is slowing down, and oil prices are obviously rising, like we said, due to the to the Middle East tension. So just bear with us as we obviously repeat a few things, because that's the headlines, that's what's happening right now. And with those interest rates that's kept the same, even although inflation is rising and this economic growth is slowing down, we're seeing the Japanese yen consolidating somewhat between the 159 and the 158. So we're waiting for a breakout of structure, or a break of structure there as well. And no, I'm not referring to ICT, any method here. I'm referring to structure. That's it. All right. So this is the current structure that the Japanese yen is in with the US dollar, and we're looking for price to either break through or go below this area here or go above it. We'll be checking that out in the trading room as well. And the same with gold. We're stuck in the middle here, so we're waiting to see what's going to happen. Do we break below 4.6, or do we go above 4.8, or do we still just excuse me, do we actually just push up between the 4.6 and the 4.8 and then take it from there? So that would be an intraday movement. If price had to push up from 4.6 up to 4.8, that would be an intraday movement, but it would still be in exactly the same structure here. So nothing significant has moved in the gold price, except for the guys that are obviously scalping from short to medium, and swinging some of those high lows, some of those highs and some of those lows that you can find on the 1 hour chart. All right, many guys are swinging it. Look at that, beautiful swings from there to there, from there to there. But obviously you can't catch all of them, guys. You may be catching maybe that one, and then you may be losing out there, but then you can get in here. So you may be taking maybe 2 to 3 trades here within a structure, because sometimes you may be asleep and price could be edging up, and it could be rallying, and you actually don't get into that move. So you got to put that into perspective for the guys as well. You can't physically catch every single move. I mean, if you were to do that, you're going to be up for 3, 6, 7. You're going to be up for a week straight, no sleep. I don't think that's healthy for your body anyway. So, you wouldn't be catching all the moves. So you may be catching maybe every second day here, or maybe every third day. That's the specific case. And you could be scalping, maybe doing 2-3 positions here. Example, this could be one position there. There's another position over here. And the same here. There's 1, there's 2, there's 1, there's 2. So there's, about 2 positions per day that you could take here. which is important for us to understand. Many guys don't always put it into that context, but we have to, for the guys that are starting out and some of the guys that are looking to get a bit, more established within their trading systems. All right, about 1 to 2 trades per day in the volatility, and that is exceptional because the kind of volumes you can put on there is extraordinary. All right, but we're seeing the divergence happening here as well. You can see price is pushing to the downside at this point. We're going to see what happens during the London and New York. You can see the overlap between the Asian and the London session is currently happening, and we're going to see at 11 o'clock where the Asian session closes, and then we'll see if the London breaks it or actually just stays within that specific section. Then we'll take it from there, and at 2 o'clock we'll be detailing down what happened during the Asian session for us to get some opportunities if there's any that presents itself. All right, but that's it here this morning, guys, with the opening bell. Short week here. We have another public holiday on Friday, so we have 2 trading rooms this week, one today at 2, and Thursday we have another one at 2 o'clock. So make sure that you get in there. It's via YouTube. You can join us live, absolutely free. You don't get charged a cent. And then obviously you can also, if you've not opened an account with us here at TD Markets, there's our website, www.tdmarkets.com. You can also email us at care@tdmarkets.com. Our support team is standing by to assist you there. That's Ashley Reeve here this morning, guys. What an absolute pleasure being with you. Everybody that managed to, get in. And if you're going to be watching a little bit later on, a warm welcome to you. If you're here for the first time, you're more than welcome to continue to join us in all of our other sessions as well. All right. Have a good one. See you guys at 2 o'clock for those that are making it. For those that are still on holiday, all right, have a fantastic one. Enjoy it. And if you get back on the charts there, maybe next week or so, make sure you do, and watch out for the FOMC meeting taking place tomorrow. That's it from me this morning. Yeah, Ashley Reeve. I'm signing out. Ciao, ciao.